So hello and welcome. This is the first video in a series that we're entitling COVID-19, Understanding the Economic Implications. I'd like to take a brief minute before we get started to give some special thanks to some people who helped organize this session. Professor Jane Binner from the University of Professor Jane Binner from the University of Birmingham in the United Kingdom, Derek Edwards of AGS Data Systems, Ryan Matson of West Texas A&M University, and of course myself of the University of Wisconsin River Falls. Today we have three panelists, and I'd like to introduce each one of those. So if each panelist could raise your hand as I say your name. Joe Folsom is the Executive Director of the Pierce County Economic Development Corporation, which is located here in Wisconsin. David Bailey is Professor of Business Economics at the Birmingham Business School in the United Kingdom and Senior Fellow of the UK in a Changing Europe program. Lal K. Adams is a Doctor of Veterinary Medicine as well as a Regents Professor of Agricultural and Business Economics at the Paul Engler College of Agriculture and Natural Sciences at West Texas A&M University. As a brief introduction to the format we're going to take, we have three questions. Each panelist will have an opportunity to respond to those questions. Then we will have a brief roundtable discussion. All right, so let's begin with the first question. And that first question is, how and to what extent is the economy of our region being affected by the COVID-19 virus? And we'll begin with Dr. Almas and then proceed with other panelists.
Good morning, everyone. Thank you, Logan, for this exciting opportunity. I'm going to respond to this question with specific reference to our region, which is Texas Panhandle. Texas Panhandle regional economy depends on agriculture and as well as medical industry. Agriculture, basically crop production as well as livestock industry, has a significant economic impact. Actually, agriculture industry contributes almost $6 billion every year in the value added. And out of that 6 billion, 4 billion, more than 4 billion is from the livestock and livestock products every year. If we include the multiplier effect, so the agriculture industry contributes almost $10 billion towards regional economy and more than $12 billion towards the state economy. So this COVID-19 pandemic is going to have a significant effect on the regional economy, especially on agriculture, because 90% of the farmers or ranchers are going to be affected. I will mention two main points, especially related to livestock industry. One is meat industry. The other one is dairy. But of course, you know, the Wisconsin people, they know more about dairy industry, how this pandemic is going to affect dairy farmers. As you know that some of the meat processing plants are either closed or they are operating at a reduced capacity. For example, Tyson, which is one of the world's largest meat processing company, they have suspended their operations at its Columbus Junction, Iowa pork plant, and they plan to divert livestock to other facilities in the region. We have one plant owned by Tyson in our region. Another company, JBS USA, they have also stopped their operations, of course, due to the, for the safety of their employees. Their beef plant in Pennsylvania, and they plan to reopen that after 2 weeks. Similarly, Cargill, they are also, they have paused their operations in Pennsylvania. So with the interruptions in the meat processing plants, the suppliers, the farmers and cattle ranchers, they are going to be affected. Of course, we do not have shortage of meat as yet for the consumers. So consumers are unlikely to see any shortages because of production disturbances. But because food suppliers are essential businesses, the consumers have to have the food. So meat producers, cattle ranchers are going to be affected. Of course, US has large enough meat inventory to prevent the shortages for consumers. But processors that were selling to restaurants, now they are selling to retailers. As many of you know that consumers in US, they spend half of their budget for food away from home. But that is not the case right now. 80% of our consumers, they are locked down. So their consumption patterns, their spending patterns have changed from going out or away from food, away from home to food at home. So there has to be some changes. And some of the, as we all know that restaurants, small businesses, they are being affected. And some of the restaurants, they have even started selling grocery or meat directly to the customers just to survive or take care of their expenses. So personally, I don't anticipate any real shortages for the consumers, as long as they do not get panic. Sometimes, because this situation is uncertain, we don't know how long it's going to continue. So some of the customers, they are, stocking the food items or other food supplies. So, but I'm concerned, and many people or the economists, they are also concerned that if the situation prolongs, it could put a significant strain on the food system and further harm our producers.
Yeah, I think we've seen similar things in Wisconsin with respect to the milk supply and farmers having a difficult time actually marketing their milk.
Yes.
We all know what's going on with the essentially supply chain incompatibility, not being able to supply enough toilet paper at the time that we want it now, because everybody's just decided to increase their inventory, their personal inventory of toilet paper.
Yes.
If I could move on to David? We'll have a chance to come back to you,
Okay.
Dr. Almas, but Dr. Bailey, I wonder if you could further discuss this issue.
Sure, very interesting listening to that. I'll talk a bit more in a sort of macro sense, if that's okay. So I would describe this very much as the kind of the economics of a sudden screeching stop. If you imagine an economy normally going along in a car, and it might go quickly at some times and then slow down if, say, the drivers are losing confidence. In this case, the government has literally slammed the brakes on and the economy, as a car, has come screeching to a stop very quickly. Now, of course, we've done that in an attempt to save lives and stop our healthcare system being completely overrun with possibly hundreds of thousands of deaths. But this has had a profound impact. So France is already into recession. Germany's forecast to take a 10% hit just on the basis of what we've seen so far. Here in the UK, just over the last couple of weeks, 1 million people have signed on for what's called universal credit, a form of welfare payment. And of course, we've seen a very big spike in unemployment in the United States. The OECD suggests that for every month of shutdown takes off around 2% off annual growth. And their leading indicators suggest the biggest ever monthly fall in economic activity. So, profound shock to the economy, deliberately induced to save lives, with a real impact on businesses, which are, as we speak, running out of cash. So some estimates that 1 in 5 small and medium-sized enterprises, for example, in the UK, risk literally running out of cash within the next few weeks. So these impacts are working through both on the demand side, and people aren't buying as much because they're either unemployed or they're very fearful of the future, and on the supply side because non-essential activities have been shut down. And even before the lockdown, there was already supply chain disruption causing, for example, automotive firms to shut down anyway. Remember, all of this in the UK's case comes after a period of slow economic growth anyway, because of the uncertainty around Brexit. So at the back end of 2019, the economy wasn't growing. At the beginning of this year, it was shrinking slightly. So, we've got considerable economic uncertainty about how much of an economic shock this will be, how deep an economic shock, how long it will go on for, and also what the shape of a recovery might look like. So initially, many economists were talking about a possible V-shaped recession, a big shock and then a very rapid economic bounce back. That's not so clear anymore. We might have a U-shaped recovery where we bounce along the bottom for a while, or an L-shaped one where recovery takes a very long time. And that's why it's important. Governments have, certainly in Europe, and to a degree in the US, have put in place all sorts of quite extraordinary measures, job retention schemes to try and keep workers in place, loans to companies. The Chancellor, the Finance Minister of the UK, I think has had now 4 budgets in the last few weeks. We were waiting ages for one, and then 4 came along at once. So huge uncertainty. I think the other point is we don't really know how long this will take. And there's a debate that is starting. We've seen it most prominently in the US about how quickly should things reopen in the economy. Trump obviously seems very keen to get things opened up again, partly for re-election purposes probably. But I think this idea that somehow you sort of trade off the economy and business against health isn't a very good way of looking at things. If we were to open up too quickly, we might see another wave of infections. We could see a considerable hit to the labor force in terms of illness. People may continue to self-isolate, and also confidence could be badly affected. Now, remember, in many economies, 2/3 of economic activity is usually consumption expenditure. So unless there is confidence to underpin that, the economy is not going to grow again very quickly. So, huge uncertainty, an impact on the demand side and also on the supply side.
All right, well, thank you very much. Joe, I'm wondering, or Mr. Folsom, I'm wondering if you could comment a little bit on this idea of how this is affecting our local, particularly our small businesses. What is this impact going to be?
And yes, and locally, that impact is significant. But what's been interesting also is just to see how they have responded on that. And what I'll do is I'll first talk a bit about on the manufacturing side. I mean, we're fortunately here in the St. Croix Valley, we do have some diversity in our economy. But in working with and talking to some of my colleagues, we're finding that manufacturers, particularly those with 25 plus or employees at the moment, are not significantly impacted from the standpoint of the they're generally doing okay. They've had to make adjustments to accommodate the hygiene standards, the social distancing, all of those things in order to protect their employees and keep their workforce able and to continue to work. But it is a significant shock. One manufacturer that had in February record sales, and I learned last week the purchase orders were zero. So we're talking about, as was mentioned earlier, a significant shock to the system. But Main Street is where the major impact is, and really with those non-essential businesses, the hair salons, the bars, the restaurants, and in the context of the restaurants, so those that haven't been able to adapt to find ways to better serve and reach out to their customers, either through changes in products or delivery methods. The other significant piece that's happened is the cancellation of some events going forward. In Pierce County, where I work, the Ellsworth Cheese Festival, which is in the third week of June, the committee this past week canceled that event, which in a small rural community pulls in 30,000 people over the course of a weekend. So we actually we're expecting that we will see some impact on the tourism sector as a result of that. And the question is when we are able to get back to some sense of normality, will those businesses be there, and how can we recover? How can we get them back to a level of productivity, and how can we get our customer, in this case, the tourists, to engage? We mentioned earlier the milk piece. Again, Wisconsin, a significant dairy state, but the simple fact that we no longer have students in schools consuming milk has resulted in an overabundance of fluid milk. And so all of a sudden we have this shift in the usage of the product that the plants and the processors haven't been able to quickly accommodate. And so we've had requests to basically dispose of milk rather than further flood the market with it. Talking with one of the chamber directors, his perspective is that some of the businesses deemed non-essential that will probably lose significant numbers, and he's thinking 25 to 50% of those, particularly those that operate in sectors with very low cash reserves, especially if they're not able to get additional working capital quickly. Okay. That's kind of what I have on that. So,
Logan, you are muted.
Thank you. Now, if we could, if Joe, I'm sorry if I interrupted you, but if we could we take just a few minutes to maybe discuss amongst the panel overall our response to this question? I know one term that came up was the word supply chain. And I wonder if maybe you guys could define that and give maybe a brief understanding of why supply chain might be so important in this, at least the initial stages of the economic impact of COVID-19. And you guys can jump in whenever you like.
You know, the supply chain is going to be affected, and it's currently being affected because, you know, the people are shelter in place. So they have the labor force is a problem in many sectors.
Mm-hmm.
From producers, of course, through the processors, and to the through the retail. And especially for food, as I mentioned earlier, there are, you know, food away from home and food at home. So food at home is being delivered through the retail sector, but food away from home through the restaurants and There is a lot of things going on which is impacting or creating interruptions for supply chain. Of course, the demand is there, supply is there, but it's in a different form. For example, as Mr. Folsom mentioned that, in case of dairy, the school and colleges, they are closed. So there is issue in milk supply. That's why, in the form of different products, and the processors, they are unable to convert their production regimes.
This is Joe. Locally here, a significant piece would be you take the food distributor that supplies the restaurants and the bars, their business
Yes.
is virtually zero.
Yes.
And you look on the other side, the grocery stores can't provide enough product because the food consumption has shifted and how they access it. So it's how do the distribution channels and the type of product being distributed adapt to the changing environment. And we've thrust this on the supply chains in such a quick manner that we're seeing these shortages and in some cases surpluses because of that.
Yes.
I could, sorry, if I
Go
could
ahead,
give another
David.
example. Yeah. So where I live in Birmingham in the Midlands is the centre for the automotive industry in the UK. So the entire auto industry in Europe and very much the US is now shut down. That just in terms of the stoppage in output through until the end of April, that's probably going to cost the auto industry in the region of $100 billion. Jaguar Land Rover, which is a major company here in the region, has stopped production, I think, through until about the 20th of April. It will be taking something like a £1.2 billion hit just from that. Now, of course, beyond Jaguar Land Rover, within the region, there's probably about 50,000 workers just dependent on the automotive supply chain. So as Jaguar Land Rover shuts down, that has a profound impact on the tier 1 assemblers, the tier 2, the tier 3. And there's this kind of cascade effect down the supply chain. There's a real worry about, as that shuts down, how many of them will survive. So despite the government putting in place various support mechanisms, loans, job retention schemes, there's going to be a real cash flow problem for a lot of these companies. Some of them may not survive. And even when the industry comes to restart, there's going to be a question of whether they'll have the cash to get things going again. The other point is that a lot of these supply chains these days, particularly manufacturing, are often across Europe. So, the UK has been a part of the European Union for a long time. It's now leaving. But there's a flow of components that crosses the European countries in and out of the UK, and components could cross the English Channel 4 or 5 times. So, you already had a shutdown in Italy for some time. That's affected component supplies. We've had a shutdown in Germany and in France and so on. So as this has become more extended, the supply chain disruption has become more profound, and car companies were shutting down production even before the government was telling them to do so, simply because our economies are now so interdependent.
All right, well, thank you for some really good discussion. If we could, I think we'll move on to our second question. And we'll get our first response from Dr. Bailey. How is this crisis different from the recent recession? That is the recession that resulted from the financial crisis. Okay,
thank you, Logan. So I've described the current slowdown as a kind of the economics of a sudden stop. In the global financial crisis, it was instability that started in the financial sector, which essentially became a kind of credit crunch, which then spread throughout the real economy. In the case of the UK, the peak to trough led to a fall in GDP of about 6%. GDP, the broad measure of activity in the economy, about 6%. But that took over a year. What we've seen is, in the space of a few months, a similar or greater decline already. Germany, 10%. The UK, probably similar. There's forecasts that the US could contract by 30% in this particular quarter. Similarly, in terms of unemployment, in the global financial crisis, it took over 3 years for unemployment to peak. at about 6%. We've seen something similar in a matter of weeks, and it's only going to get worse. So the profound nature of the shock, the intensity and the speed of it is, I think, unprecedented certainly since the 1930s. And there's an issue there of whether a recession becomes a depression, a deep, long-lasting downturn in the economy that's kind of interconnected through economies and difficult to escape from, with possible kind of scarring effects on the economy, what economists call hysteresis effects, long-run damage to the economy. The World Trade Organization, for example, has talked about a decline in trade of about 13%, and in a worst-case scenario, over 30%. That would be similar to what happened in the Great Depression. I think the other sort of difference with the global financial crisis are the scale of government interventions that we are seeing. So, not only things like quantitative easing from the Bank of England, the European Central Bank buying bonds, but also the Bank of England basically creating, in effect, an overdraft for it to buy bonds being issued by the British government. We've seen the government intervene with loans to businesses, or whether they really get to businesses, I think is going to be a big issue. And we've seen a whole series of different government interventions. And I do wonder whether this is kind of going to be a sort of a reset moment for us. We did talk about this during the global financial crisis as to whether we sort of rewire the economy and do things differently. We didn't really. So I think there's going to be questions about how the banking system functions. Is it getting support to the businesses that need it on the scale that we want? Who are the key workers in the economy? I think that some of the people really doing the hard work at the front line in social care, in health, in deliveries are often very low paid. We might reevaluate who's important in the economy. There are going to be issues about fairness and inequality and who gets impacted most by this. There's going to be discussion about the nature of a welfare system, I think. In Spain, for example, they're talking about whether there should be a universal basic income. Everybody's paid a basic salary. Those sorts of discussions will come back. And then sort of longer term, I think there are issues about, well, who bears the burden? Governments are going to be stacking up big debt throughout this process. Who's going to pay for it in the future? Will there be issues like maybe a wealth tax back on the agenda? Questions about the resilience of our economic system as well. It's certainly in the case of the UK and I guess the US, we weren't very well prepared in terms of our economic system being able to produce the things that we want quickly, whether they're ventilators or protective equipment for nurses and doctors. So there's a broader question, I think, about how the market works. And I think some of these issues are going to come out because of the severity of the crisis and what a profound effect it's had.
Well, thank you very much. I'm wondering, Joe, do you have thoughts on this? And you're currently muted.
Okay. Yes, I concur that it's really, the scope and the speed with which we've entered into this is unprecedented. I mean, as one business owner shared with me, in the prior recession, we kind of knew it was coming and we could plan for it. This thing we couldn't plan for and make the needed adjustments to our business operations. And so that was significant. I think, for us locally here in the St. Croix Valley, and I was, one chamber director shared with me is we did not go into the last recession very deep, and we actually came out of it a lot quicker, and with really only the construction sector being significantly impacted. This particular event has impacted our whole sector and has taken us in deeper. I think that one of the questions is going to be, from the standpoint of when we do come out, what are, excuse me, I apologize here for a second. I lost my train of thought. The impacts on some of our businesses, what will they look like when they come out? What will be the new norm? will restaurants be the same again? If we are into this for 8 weeks, habits change. And instead of going to your favorite restaurant on Friday night, you're doing the order out from that restaurant. Will you revert back to going to the sit-down situation? There will be changes in the supply chains, in the distribution, and how you approach your customer. And there will be those sorts of adjustments happening to your products and services. And what's interesting is they happen in this case overnight. And so you have Main Street businesses who are adjusting their products and services almost overnight in order to be able to stay open, as opposed to, again, having in the prior recession, the opportunity to do a little more planning and put a little more thought into how they might cope with the situation.
All right, thank you, Joe. Lal, do you have a perspective?
Yes, I agree with my other panelists. I think that this crisis is different because of the magnitude of the people that have been affected and the sudden nature. A lot of people are out of workforce. For example, in US, more than, I think it's the last week's report that more than 10 million people, they have filed for unemployment insurance. So small businesses are going to be affected significantly. And even the stimulus package is not going to help, many people. So the previous recessions, they were having different impact on regional economy or on workforce differently. But the magnitude as well as the sudden nature of this pandemic is going to have different impact. And everyone is going to be impacted one way or the other.
Well, initial claims for unemployment benefits for the last week, so the week ending April 4th, just came out, and it was 6.6 million, which was followed by the previous week at it looks like 6.9 million. It's been revised up slightly, which just dwarfs the maximum it's been in the history of that series. Before, I believe the maximum that we had seen was somewhere in the neighborhood of around 680,000, once peaking at around that level during the financial crisis, and then once in the fairly significant recession in the early 80s. And so this, I think, provides a strain not just to our the economy from the standpoint of a number of people out of work, but also from the institutions within the economy. Like, for example, if a system designed to handle about 300,000 applications every week is suddenly inundated with 6.6 million, you start to have just other practical issues. I wonder if we could take just a minute or two maybe to talk about some of the practical issues that are different about this recession than some of the others that we've seen in the past.
Logan, if I could step in and just add a couple of things here. One of the things here in the upper Midwest that is different in this recession as opposed to the last is the last recession, like I mentioned, we did not go in as soon, and we came out quicker, but the diversification and the ability to export an array of products here in the upper Midwest really insulated us to some degree from those impacts, and we don't have that level of protection this go around because of the nature of how this has hit us. It's interesting thought in that respect. So I just wanted to add that little piece out there.
And
If
Logan,
I could,
if I can add, you know, the oil crisis also is kind of deteriorating the current situation, because, you know, in our state, most of the revenue comes out of oil industry. So, you know, if you don't have revenue, how you are going to support or fund all the activities in the future years? So that is also a concern, because I have heard that in Texas, if the oil price is kind of $60 per barrel, then they can have sufficient revenue to take care of all the budget issues. But now it's what, 25 or below $25 per barrel. So you know, the people in the budget, they are concerned that, you know, how we are going to have revenue to fund all the activities.
yeah, just to follow up on your earlier comments, Logan, it's a similar situation in the UK. So I was hearing some figures on the television last night. Normally, the UK government would expect maybe 50,000 calls in a day on the helpline regarding universal credit, which is a kind of key welfare payment. One day recently, there were over 2 million calls, and the queue to get to speak to somebody was over 160,000 long. So you've got a system that is completely overloaded. Equally, some of the support, really good natured support that's being put in place by the government, I don't think it's necessarily hitting the target. The Chancellor's had to keep coming back with new offers to try and fill the gaps. You know, they're trying to respond to things. But for example, earlier this month, there were figures saying that whilst there'd been loads of interest and requests from businesses for loans, only 1,000 had been made. You know, so it's really small scale stuff actually getting through. So they're having to redesign the schemes to make more firms eligible, change the nature of the guarantees required, say that whereas initially they were saying, look, you've got to go through whatever the banks can come up with normally to see whether you're eligible for a loan. They've had to cut all through that because of the crisis engulfing many firms. So constantly having to rethink what it is that the state does to try and plug gaps.
The other part is really the scope of the need for the capacity to deliver some of these services and tools that we put out there. When we think about the Paycheck Protection Program that the Small Business Administration in the U.S. has been handed, the delivery system that is being delivered under, which is really, I think, from my perspective, having formerly worked there, is the ideal conduit. That system would typically, in the course of a year, process in the neighborhood 50 to 58,000 loans, and here in the period of less than a week, we're getting, it's getting criticized for having only processed 178,000 in the first 4 days. And so we have systems that are not designed to accommodate this rapid change and ramp up or scale up, even though, and the magnitude is so much greater than what was originally planned. I know that this magnitude was not in the agency's surge capacity when they did their disaster preparedness plan.
Yeah, another constraint, in delivering services for the, I have heard yesterday in the news, some of the states for the unemployment insurance claims, they are still using COBOL framework, the COBOL language, and we don't have, that was developed in 60s and 70s, and we don't have many coders for that language to process that many claims. So how we are going to deliver? That's an issue with many states. Just to process the claims.
And I would suggest it's also an issue with a number of federal agencies too.
Yeah. Mm-hmm.
Systems, and they're not integrated, they're not modernized.
All right, wonderful discussion. But alas, I think we need to move on to our third and final question. And we'll start with Joe Folsom on this question to begin with. And that is, What businesses local to our region will be able to survive and which will fail or struggle?
Um, from my perspective, those that are able to adapt their products and services and distribution so they can continue to connect and serve their customers have an increased likelihood of survival. In other words, those that are innovative and nimble on their feet can sense how they can best move in the existing environment that they've been thrust into. The ones that will not survive are those that decided when the shutdown order came, we'll just close our doors and not look for the opportunities to move forward and to keep their businesses viable and open. I have a sense our major employers will be okay. That's but the smaller and deemed non-essential businesses are where we're going to have the biggest challenge. As I mentioned earlier, I think one of our chamber directors expects 25 to 50% of those will be lost forever. So those that have been ordered to close, namely the salons, the bars, or restaurants, those that did not adapt to the current environment, we're going to lose those as we move through this. We'll likely add to that businesses that may be seasonal in nature, that are tourism related. Those are going to have significant challenges. And if we do have the social distancing continuing to a significant degree over the course of the summer, that sector will be impacted in a way that'll take some time to recover.
Okay, Lowell, I wonder if you have a take on this as well.
I agree with Mr. Folsom, but this is a challenging question. With the no quantity data, we cannot quantify that, which businesses will not be able to survive or will be gone. But of course, the small businesses, if they don't have a cushion, or ability to adapt quickly, they will be unable to survive. Especially, for the dairy industry, they are already facing so many constraints. The dairy farmers' future market price for even the third grade milk or is for the future price for the May 2020 is $12.88, and their cost of production is more, so they are already losing money. So that's why they are dumping. They have been told to dump their product. So how long? It depends how long this continues. If it continues for a longer period, many businesses, they will not be able to survive. Of course, the higher education is also going to be impacted. Food industry is going to be impacted. Restaurants, small businesses, shops, they are going to be impacted. So in summary, I would like to say that we cannot quantify, but of course there is also help on the way through the CARES Act. But I don't know up to what extent that help is going to help the small businesses to continue.
And David, I wonder if you have a perspective.
Yeah, I would agree very much with what we've heard, and I think Joe summed it up very well. I think those businesses that can change their business model, that can adapt, often go online, for example, and offer consumers something in a different way, are more likely to be able to survive and prosper. Just to give you a local example, I bought some face visors today, in case I have to go out. We're not really going out very much, but they're kind of plastic shields for your faces. It's a company that makes window blinds. They've stopped making those. They've reorientated into something where there's a demand. So they've thought about how they can use the skills they've got to meet particular market needs. It's been very creative of them. There's lots of examples of that, of companies that are having to be innovative. I agree well with the other comment that the university system is, particularly in the UK, is going to face some major challenges. We rely very much on international students to come to the UK. Many, students from all over the world at the university where I teach, are they going to come next year? Are they going to even be able to do the English language test to come? So there's going to be a big issue about how we do offer our services in the future. Is it going to be more online? Are we going to have to do things more virtually? Are we going to find different markets? And I think that those are the sorts of questions that affect us. And of course, whilst this really sudden grinding to a halt of the economy has affected many sectors, there are some that are doing very well. So the supermarkets here are working absolutely flat out, trying to keep the shelves stocked, keep the supply chains running. They've taken on thousands of workers as deliverers and are constantly trying to struggle to keep up with consumer demand as people stockpile things. If we think about the agricultural sector, we heard about how the fact that some shops, restaurants in particular, and schools may have shut down, impacting on dairy. Similar sort of thing here, with an added problem that agriculture relies massively on immigrant labor, which has disappeared. So a huge issue about whether we can reorientate people laid off from hospitality, say, into picking fruit and vegetables. And similarly, the manufacturing sector shut down. And in many cases, having to try to think about, well, how can it reorientate towards things like protective equipment for doctors and other parts of the economy? So, those companies that can survive this, that have got the cash to do that, and that's a big issue, the cash flow problem, if they can reorientate and find new markets, they have a chance to survive.
All right. Well, very good. Thank you very much. I wonder if we can just open this up for a bit of brief discussion amongst the three of us, or the three of you. And I might ask one follow-up question. Of course, in economics, we have a term, it goes back to the beginning of the 20th century, called creative destruction. And part of what we're going to see is we're going to lose certain things. So we've talked about this idea of supply chain, which I think of as just that process by which we get inputs from their raw form into the final form that goes to the consumer and get those to the consumer. So that whole process by which that happens. And thinking about the disruptions in that, once we disrupt it, how fast do they come back, and what comes back and what doesn't? And we've talked about some of these non-essential businesses being things that are lost, at least temporarily. The particular business is lost, but how long does it take for that to come back? But I wonder, is there a silver lining to this? And is there going to be new opportunity at the end of this, once we get through it, for new innovation, new product lines, new supply chains to happen? It's terrible to think of a positive to a pandemic, but can we at least try to see a little bit of the silver lining to a lot of the bad news that we have? Do you think that any of that is possible? Could that happen?
This is Joe. I just got a comment that I wanted to interject here. It's actually on the operations side. We've had so many businesses that have had to adjust their business model so that their employees are working from home. And my sense is that we're going to find, especially as we continue through this, and the longer we continue through this, that those businesses, when things get back to the new norm, may not necessarily bring those employees back into those expensive office suites. They may continue to leave them at home because they have been able to not only provide an opportunity that protects and the employee, but also it's a way that they can lower their costs and get some efficiency. So we may find some changes in the financial institutions. We're all doing our banking from our home offices now. Why do we need a brick and mortar walk-up institution to walk to? So I think those are some things that are going to take place, that those businesses that see those advantages and opportunities to get some efficiencies in the production on the operations side will have a competitive advantage.
Yeah, if I could come in as well, I think that's a very good point. If we think about previous shocks, they impacted in different ways on different cities in the UK. So that, the city that I'm in, Birmingham, underwent a profound deindustrialization from the 1970 onwards, and it's taken a very long time to recover to that. And when we think about resilience in an economic sense, it's not just resisting a shock. And we heard from Joe about how in previous shocks they were able to resist things better, but also how quickly you recover, and also reorientate and renew. How can you get onto a new development path? How can you embrace new technologies and business opportunities? So I think, if there is a silver lining, it's in that reorientation and renewal into new business opportunities. I think the danger here is that a lot of efficient, valuable, otherwise good companies are going to be taken under. So yes, there are opportunities. There's also a real risk we lose some very valuable parts of the economy as well.
Okay, any remaining thoughts that any of you would have over any of the material we've covered that we haven't gotten to yet?
I mean, this is Joe, and I think one of the things that I have appreciated in the conversations that I've had with community leaders is how they're approaching this in a positive context. And I think the fact that we can approach it in a positive context and look at it from the perspective, how do we find solutions and opportunities to move forward in the best way possible, I think that really bodes well for our recovery.
All right, well, very good. And I think that might be a good note to end our conversation on. Obviously, this is an ongoing situation where what we say and think can be changed by new data from minute to minute. But I really appreciated each of you being willing to give your perspectives. If for nothing else, giving us a little bit of an idea of what questions we need to ask, even if we don't know all the answers yet. So thank you very, very much.